In this presentation, we will discuss loan assets related to colleges and universities. Loan assets, assets that are loanable to students, faculty, and staff. So a loan asset are going to be assets that are loanable to students, faculty, and staff. Loan assets are provided by gifts, grants, and income from endowments. Recording for loan assets is generally the same under GASB and FASB standards, and therefore generally the same for the governmental type of entity, the university, the public, and the private standards, with the following exceptions. Here is our table for the loan assets. We've got the public institutions, that would be the governmental entities, the public universities, and the private institutions, which would be the non-governmental entities. If we have cash contributions to be used for student loans, so we're the institution, we've received cash contributions, however, they are to be used, that's what was told to us by the people that gave us the contribution, for student loans. Then within the public university, it would be reported as restricted net position. So the net position, you'll recall, is going to be similar to the equity section. So when we think about the equity section, we're thinking about the net position. Assets minus liability equals net position. So it's within net position, it'll be restricted net position. On the private side then, which would be similar to the not-for-profit types of entities, rather than it being called the equity section net position, as in for a public institution, it will be called net assets. So assets minus liability doesn't equal equity or it doesn't equal net position, it equals net assets. So that's kind of a naming terminology difference really there. So then this would be called net assets with donor restrictions. So it would be reported as net assets with donor restrictions. So what if we had a board designated cash for loans to students? So what if the board designates cash? Says the board says that we're going to designate this cash for loans for students. Then on the public side of things, it's going to be unrestricted designated net position. So notice it's in unrestricted, not restricted, even though the board designated the cash for loans to students. And then it's going to be assigned as designated net position. So again, within the equity section, now we've got unrestricted and now we've got unrestricted with this designation for the net position. On the private side of things, if this was to take place, it would be designated net assets without donor restrictions. So again, it's kind of like the terminology is basically the major difference between here, the two entities. So designated net assets without donor restrictions. So again, it's still without donor restrictions, but now it's got that terminology of designated, another line item, and basically what would be similar to the equity section of the balance sheet type of statement. So loan of cash is made to the university to be used for loans to students. So now the loan of cash is made to the university to be used for loans to students. That would be recorded as a liability for both the public and private institutions.